Nevada's housing market has been on fire, booming prices, wild demand, and people rushing in like it's the new gold rush. But what if I told you that gold rush is about to end? Because behind the shiny new houses and rising property values, there's a storm quietly building, and when it hits, it could wipe out millions in home value overnight. 5 Nevada cities once called safe bets are now sitting on a ticking time bomb. If you own a home, plan to buy, or have money tied up here, you might be standing right on the fault line. Stay with me, because in this video, we're recounting down the 5 Nevada cities where the real estate market is about to crash hard. And at the end, I'll reveal what you can do right now to protect yourself before it's too late. Number 5, Carson City. Carson City, quiet, charming, and surrounded by beautiful mountains, used to be a dream for buyers who wanted space without the chaos of Las Vegas. But lately, that dream is fading fast. Home prices shot up nearly 45% during the pandemic, but in the last year alone, listings have nearly doubled. Buyers aren't lining up anymore. They're waiting, watching, and calculating. And the big issue, wages here never caught up to home prices. Even families with 2 full-time incomes are struggling to qualify for average homes. As inventory rises and sales drop, sellers are panicking, cutting prices, offering incentives, even covering closing costs just to move their properties. Economists predict Carson City could see one of the sharpest regional price corrections in northern Nevada by mid-2026. The bubble isn't bursting yet, but the air is definitely leaking out. Number 4, Reno. Reno was supposed to be the new tech frontier. Tesla, Switch, and Apple all opened facilities nearby. And suddenly, everyone wanted a piece of the biggest little city. Investors came in waves, prices skyrocketed, and locals got priced out. But now, the migration wave has slowed down. Remote work is shrinking. Major tech layoffs are hitting the region, and people who came from California are realizing they overpaid. Luxury homes are sitting empty, while first-time buyers can't even get approved. And that's not all. Construction hasn't stopped. Developers built thousands of high-end condos and townhomes based on the 2021 boom. But that demand doesn't exist anymore. The result, oversupply, falling rents, and desperate sellers. Analysts already warn Reno is dangerously overvalued by 25 to 30%. If mortgage rates stay high, Reno could become ground zero for Nevada's housing correction. Number 3, Henderson. Henderson has always been a favorite for retirees and upper-middle-class families. Clean, quiet, safe. But that calm image hides a growing problem. Too many investors, not enough real homeowners. During the boom, out-of-state buyers bought entire neighborhoods for Airbnb rentals. Now, new short-term rental laws and taxes have destroyed their profits. Those same investors are unloading properties fast. And when investors sell, they don't wait. They undercut the market to exit quickly. That SYU seeing dozens of listings slashed by $20,000 to $40,000 in just weeks. It's a domino effect. One seller drops, then everyone follows. If Henderson's inventory keeps climbing at this rate, we could see a 15% price decline by the end of 2025, something unheard of just a few years ago. Number 2, North Las Vegas. North Las Vegas, once the symbol of affordable living, is now showing worrying signs of history repeating itself. This was one of the hardest hit areas during the 2008 crash, and the same pattern is returning. New homes sprouted up fast. Developers bet big, but buyers didn't follow. Today, many of those homes are sitting half-finished or unsold. Wages here haven't kept up with inflation, and credit card debt is at record highs. Many first-time buyers stretched their finances to the limit, and if rates rise again or the economy dips, foreclosures will come back hard. You can already feel the tension. Desperate listings, zero offers, and investors quietly stepping back. Once fear hits this market, it spreads like wildfire, and North Las Vegas could become the epicenter of Nevada's next housing collapse. Number 1, Las Vegas. And finally, the king of boom and bust, Las Vegas. This city runs on risk, it always has. But when the gamble is real estate, not everyone walks away a winner. Between 2020 and 2022, Vegas saw one of the biggest housing surges in America. Homes doubled in value, investors rushed in, and even locals who never thought they'd sell cashed out for record profits. But now, the tables have turned. Tourism jobs haven't fully recovered, wages are stagnant, mortgage rates have doubled, And what's worse, investors who bought 2 to 3 homes are trying to sell before the correction deepens. Analysts predict Vegas could lose up to 25% of its home values by the end of 2026 if national conditions don't stabilize. And remember, when Vegas crashes, it drags the whole state with it. What you can do right now if you're a homeowner, now's the time to get smart. Consider refinancing if you can lock in a fixed rate. Don't overlay. Keep emergency savings ready, and don't rush to buy just because prices look cheap. If you're an investor, focus on cash flow, not hype. Wait for stability, because real estate always rewards patience. The Nevada market is entering a dangerous new phase. The winners will be the ones who plan early, not the ones who panic late. Nevada's housing boom made a lot of people rich, but history shows every rise has a fall. So before you buy, sell, or invest, do your research. Protect your money, and remember, in real estate, luck fades, but timing lasts forever. If you found this video helpful, hit that subscribe button, because next we're revealing the 3 states most likely to follow Nevada's crash next. Until then, stay smart, stay sharp, and don't let the next housing bubble catch you by surprise.